Thanks for purchasing this program. You can call it an indicator, but it's actually a very intuitive tool that does more than what a regular indicator does, and I'll show you how. The main tool is called FemyRange Pro Plus, and the bonus tool specifically for options is FemyRange Pro. So the way to get it in is you go to Indicator, and you go to Invite Only. When you get to Invite Only, you just select I would have given you access by now, so you'll be able to access it. Once you access it, then you can turn it on. So right now the screen is bare, without the tool. With the tool turned on, and this is what you see. Now it might look busy to you, but it's really not. So let's look at today. So we trade this on 3 minutes and 30 minutes. So it's using a 3-minute view, but a 30-minute for entry. So the first thing you see is at 9:27. You get this diamond here. This shows you a reversal to the downside. If it's blue, it's a reversal to the upside. So they're close by to each other, but there are other things that we use too. Decide if we're in on the right side or in on the wrong side. So we don't trade pre-market, so we focus on when market opens. Now this could be used for futures. It could be used for regular and other applications. So for example, if I double click on this, it brings up the setup. So it could be used for ODT swing or futures, right? So if you want to swing trade at specific settings, there's a manner that goes with that, right? Now under here, you go to the last page. There is execution. If you switch this to advanced, this parameter presents a lot more. Information. Now the information that it presents includes things that are already incorporated. You know, the bull power, the bear power, who's in control, the trend, net momentum, things like that. But we leave it on execution, which is always the default that you're going to see. But I just needed to show you that you can change what you want to see if it's only A setup, B setup. But I don't advise you to touch this. I don't advise you to touch anything here. Since we trade ODT, we try to look for ODT and 1DT, and the times are set for this, right? And we suppress the open, which is 9 o'clock to 9:30 to 9:33. Okay, and that's all about the settings. And so what do you see? Right here, let's look at this current signal. The current signal is giving us a short. It first gave us this, meaning there's a reversal. Then we get a short. Once we get this short, we look at the power meter. The power meter shows us the readiness, right? It says it's almost at 56%, waiting for confirmation. Trade is watch, or it could be go, right? But it says it's mild bearish, meaning it's tending towards bearishness. The market bias is 60%. This market bias is looking at multiple time frames up to the 1-hour time frame. So we try to trade within an hour, but once we're in a trade, we stay in a trade. Like this morning, we got into this trade. A little after this price closed, we got into the trade, and there was no reason to get out. Even when price came up, we stayed in the trade because we recognized this to just be pullback. For as long as the trend does not change from red to green, we're still good until here that the trend changed. So we got a really decent chunk. It keeps you in the trade. It told you right here that this is a short A+ setup trade. Now why is it coming up with that? It's coming up with those percentages based on confluence of what are the things that could be in its way. Is there a support that you could hit that is so close before it taps its ATR that could stop it from moving forward? So if it's going to get to a target profit, what is going to stop it from getting to that target profit? All that factors in. It's a mathematical calculation, not just based on what you were just seeing. So we took this trade, and when you see those diamonds, it says potential reversal, bearish rejection, meaning if price comes up here, there's going to be a rejection there. Of course, this is the trade signal. Then you have this small triangle, which is early entry. The bearish is confirmed. You can get in early if you don't see a buy-sell signal in this case, right? When you see a Z with a diamond, that means there's a bunch of resistance that is sitting here, meaning multiple diamonds are sitting there. These are diamonds, the blue and green diamonds. They are key diamonds that represent areas in the past where price was trending for about 5 to 8 bars, and then hits that point, breaks, and falls down for a minimum of 5 to 8 bars. We recognize those as key support and resistance zones, and we've identified them as blue diamonds and yellow diamonds. Now, if you see multiple diamonds at a time, if you see multiple diamonds together, the system recognizes there are multiple diamonds. In order not to clog the screen, it's going to give us a Z at that point. Therefore, knowing this for a fact, it now becomes difficult for price to want to go up at this point. So price came down. You get another one here. Then you get this reversal signal. So this reversal signal is a point of entry. Your entry has to be realistic. You don't want to take an entry here, or the stop. You don't want to take an entry at the close of this candle, where the stop is down here. This entry doesn't come at the close. It comes in real time. So they are really more thick-based, unlike some others. Now, this is strictly price action trading. It doesn't use any moving averages or anything like that. We're just focusing on the price action. We deal with fair value gap, liquidity zones. So this is a liquidity zone that we recognize that there are sellers sitting here, and it's called high probability zone with an 82% chance of it holding if price gets there. So the system, while it's working, when it gives a buy, you see this buy signal did not give a percentage, because it recognizes that there is a strong resistance up here that may hold any action to go up. But on this one, an A setup with 5% confidence is telling you that I don't see anything that could stop it on its way down to hit at least the first 2 profit targets. So let's talk about that. In this case, we get a short that is 65%. It comes down here. There's a liquidity here, which as you can see this little shade of green here. It presents a liquidity zone, but it's not anything to really worry about because we're still on the downtrend. So once you're in a trade, just follow the lines. For as long as this trend is on, stay in. Stay in. These two, we keep you in a trade if you follow the rules, right? And then you can come down. It's identified target profit 1, target profit 2. But it also identifies 2 other things, projection 1 and projection 2. The projection is where price is going to go eventually, right? So no, I don't know any tool out there that gives you projection. So this gives you projection. But the other thing that the tool does more than anything out there is this power shift meter. The power shift meter does it all. You see right now it says wait for trade, choppy market. It's recognizing we're in a choppy market. The last signal came 3 bars ago. So you look at all of this. When it says it's ready here, right now, it's saying waiting for setup. So at this point, you don't do anything. If you're in a trade, you just wait, right? If you're not in a trade, you don't get into a trade. Now what are these bigger triangles? These bigger triangles is the higher time frame. In this case, it's looking at the 30 minutes. So these are the 30-minute candles, right? The last stop loss that you see is for this trade signal that came in. So it's identifying where you should put your stop. And surprisingly, 9 out of 10, this stop's never hit, right? So the tool, you don't just get stopped out. You get stopped out if you don't follow the rules. This is a moneymaker. And that's why we're confident to give you a 7-day free for use, because that will pay for your year of use, not for at least a month of use, if not for the year. Just depends on how you trade. But it's following the rules and sticking by it is very simple. You see the signal, you take the trade. Now if you come in and price is already here, this dotted line is here. The distance between here and here is far. For example, if you want to take a trade here, look at where your stop is. But what I advise is wait for price to come back to the dotted line, and then you can take a trade. Like someone today missed the entry here and waited. And on this candle, they jumped in on the trade because price came to the dotted line. Then they took the trade, and were able to ride it. Added more when it came back here, and this one continued to go down. 3 opportunities to add. Every time it gets close to the dotted lines, it's an opportunity to add to your position and so on, for as long as it's in line with what the reversal strength is. Right now, this guy is saying mildly bullish, but the market is bearish because we're still on a bearish trend. So why is it mildly bullish? So this allows you to understand where your stop is, because this is in relation to the underlying. But what is it in relation to the option contract itself? And what is the fader, the delta? How does 4-cross impact your trade? All of that comes into play here. But there's only one thing you need to do in order for you to make this go active. So right now, we are on short, so we can take a trade. If I double click on this, it brings this up. You don't want to get into a trade here because it conflicts. And you're saying market bias is neutral, 35% to the green side, meaning it's still 35% bullish, but 65% bearish, right? So that's what the tool does. The blue dots, the purple magenta dots, and you just stay in the trade. One other bonus that I give is this, the Option Pro, FemyRange Option Pro. What this is since we trade option, we need to be aware of certain things, right? So I would just need to put what's the option price. Let's say I'm paying $2.70 for this option, and I'm paying 50 cents for it. And let's say I'm buying 10 contracts, right? I say, okay, that's all I need to do. Wait for the system to populate this guy. Right now it's telling us the 4 regime is normal. So there's nothing crazy about the IV. We have 0 DT, delta is 0.5, and we have 10x contracts, right? So we furnished it with the information, and it's waiting for a signal. So this should populate. Let me turn it off. I'm turning back on. Once it populates, it will show you, okay, this is your option entry. It'll give you what the option value is at the time. It'll give you the estimated profit and loss, the underlying stop loss, 69,622, which is this. The option stop. It'll give you the option stop price. It'll give you the underlying target profit one, option target profit one, and it'll give you the dollar amount to that. So it'll give you all of this. Now let me go in here because it needs to be recorded. So we are in a put, so it's trying to identify what it is. It gives you the time left for the trade, which is 3 hours, right? So right now, this is not, you see, contracting premium cross. So when you see contracting premium cross, you don't want to take a trade when the premium is crashing. That means you're going to buy something and you're just going to get killed. It's not going to move. You're not going to make money from it if you're trading option. So status is waiting for signal. It's feeding from this tool itself in order for it to make its decisions. As you can see, it's going down. But the last 2 candles have been flat. So price is not really moving, which coincides with what this was saying earlier. Contracting, because when market is going sideways on 0 DT, you're going to be losing money. So you can either choose 0 DT or 1 DT, right? You choose either, and you get into the trade, and you wait for the trade to play itself out. Once you take a trade, accept the risk. That's how you're going to maximize. If you look through, trade started here, it got you out of here. So if you take it here, 696, 676. Let's say you take it down up to here, 672. That's 4 points from here to here. So we go back. We don't look at after hours, but look at this. This was a choppy day yesterday. How does the market happen? How does the market handle choppiness? Look at it. Entry, exit, another entry, exit, another entry, exit. So there's money to be made. You hit your target to take your money. Another entry at 11:45 takes you get out at 1:15. Boom. Another entry at 1:30 goes up, goes out there. Another entry at 2 o'clock all the way down to 3:15. There's money to be made every day. And I took this entry yesterday, and I just stuck with it as market closed. So I had a run. And when market was about to close, I sold some, kept some, and that made it possible to enjoy all of this. So if you follow this system, the system will reward you. So now we're getting a signal here, right? But we don't have this did not live long. It's done. So now we are on the upside again, but it still say, wait, choppy market. So what does the 4 say? It's contracting. Premium crossed. When you see premium crossed, it would be wrong for you to get into a trade knowing that you're not really going to make money, right? So you don't want to do that. So that's the tool in a nutshell. Feel free to join our Discord. It's free. If you signed up, you would have seen. And where you sign up, there's a chat there. Send a message if you don't have the Discord information, but I believe you have it in the order. So join our private Discord. It's only for those that sign up for this service, and we all trade together. There are different classes of traders in the room. So I look forward to working with you and working alongside you and making money together. Thank you.